Adarsh, you have went on from being a software engineer to a product manager to a consultant
Yes.
to a CEO to a startup founder, not just in profiles but also across industries. You've been the CEO of Airtel Digital and you came in at a time when Geo disrupted the telecom industry.
Everybody was convinced that this company, Airtel, is not going to survive this battle. We took $100 million out of the cost structure every year.
What a hedge fund is, what do they do?
The question is, can you build models that can actually predict the direction of a stock curve? And if you can predict the direction of a stock curve with some level of accuracy, you can then start using that to go buy and sell. Inside Optica, our chief investment officer is AI.
Hi Adarsh, welcome to the show Beyond the Grind, and thank you so much for saying yes to this. Means a lot. I think this is your first time teaching at ISB, and you're teaching a course called Marketing Leadership in the Age of AI. How is the experience?
So first of all, Arushi, thank you for having me in your show. The experience has been wonderful. Like you said, it's the first time teaching, so I don't have anything to compare it to. The students have been great. I think the setup for delivery has been fantastic from ISB, and the class participation has been the best part of it. We're having such good conversations around the topics we're presenting that makes my life like super fun. So thank you for that.
Adarsh, let's first talk about your Airtel journey.
Okay.
You've been the CEO of Airtel Digital, and you came in at a time when Jio disrupted the telecom industry. It not just consolidated the market, but the entire transformation that happened set up the fundamental infrastructure for digital growth in India.
Correct.
Without that event happening, UPI, the entire digital startups that have come up wouldn't have happened. But that was a difficult time for Airtel. What was the internal environment like at that time?
That's a great question, Arushi. So in 2018 summer, I was actually working at a startup called Convoy back in the US, right? And we had just finished up a Series C race and we had become a unicorn. And that's when I get this call from an agency that talked about an Indian telecom looking for a product officer, a chief product officer. And I'd never heard about that role inside a telecom before. So I was curious.
Very traditional industry.
Absolutely. So curiosity, I took the call. And that was the opportunity to meet with the leadership team at Airtel. So Mr. Sunil Mittal, who's a chairman, Gopal Mittal, who was a CEO. So got a chance to meet with them. And I had no expectations from the call. But it was a great opportunity to meet some great leaders, right? The story I heard about Airtel, which really fascinated me, which eventually led me to join, was one of a company that kept reinventing itself. You know, very early in the 2000s, when there was another disruption in telecom, Sunil told me the story of how he literally revamped the company to fight that battle and win. And he's done that like 2 times already.
Yeah.
He told me this is the 3rd time. And here, the challenge is there is another company that's come in with a tremendous amount of resources, and they were using technology in a way that was never used before inside telecom. And to give you an example, to get to know where to put a new tower, they would actually crowdsource data from people to understand if there was demand, and then based on that, put a new tower on the location. Digitally crowdsourced, right? So Sunil and Gopal, I think, understood that there is something changing here, and they had to change the game. So that's what I loved about it. A very big company, at that point, I think it was multiple tens of billions of dollars, and they were thinking about a transformation like a young startup, reinvent themselves again, and they were looking for a partner to take them on the journey with technology, with digital, all that stuff. I thought it was a great opportunity to go give it a try. The funny part is, every time I called a friend who was in India at that point, because I was based in the US, and I asked them whether I should try this, it was a definitive no.
Yeah.
Because everybody was convinced that this company, Airtel, is not going to survive this battle, right?
Yeah.
So that gave me a little bit of that underdog story. Interestingly, I said, why don't you go give it a try? And then I moved to India, spent 5.5 years in that journey of transformation.
And rest is history.
Well,
4
it's worked out
players
really well.
survived, yeah. And from this transformation, a lot of new businesses came out of Airtel and Jio as well.
Yeah.
So inside the company, how did you go about this change management? I mean, there are many, you're cutting cost on at what rate are you providing internet to the consumers, the call rate, etc. So what you're burning there,
Yeah.
you're recovering somewhere else.
Yes.
And the industry is growing eventually after 5 years that we see. How did that happen?
So there's a lot of different thoughts that come to me when you say that. Right? I want to kind of give credit where it's due. So I want to first talk about Sunil himself and the corporate office. I think they did a fantastic job by fundraising and providing enough capital to Airtel to make this transformation. Because you can imagine, we're bleeding hundreds of millions of dollars in a year because of that price going to zero problem, right? Then the second thing that happened is the incredible operational processes that Airtel had and the focus to basically reduce cost. This is the War on Waste program. Now, it's funny, it's called the WOW program. So the first time I got invited to a WOW meeting, I was like, oh, this must be a very fun meeting, right? Well, it wasn't. It was a war on waste. And it was such a hard meeting because the questions asked into the team was, how do you basically take down cost by 30%? Right? So I know this one example where in the customer experience team, which I eventually led, we took $100 million out of the cost structure every year. Wow. And that's not a small amount, right? And as you kind of think about the effect of that over multiple years, so much money is being saved, right? The third aspect of it is, okay, now that you've got the money and you've got this focus on cost, how do we basically reignite revenue? So here the magic was one of transformation of the company and two of new revenue streams. Transformation of the company, we can go into in detail, but we spent a lot of time working with the leadership of the company, with the existing team of the company, and bringing new practices from digital, learning how the current telco works. And we melded it together to create a new singular way of working. And we used to call it One Airtel. Because it was important to understand it's not a new team and an old team, it's this combined force, bringing everything we know with the experience, with everything the digital team knows in terms of the new ways of working. How do you bring it together? We transformed go-to-market, we transformed customer experience, we transformed how the network works. So it was at the core that we were changing things, right? So there are many stories of how that led to better revenue for the core business, right? Then came the new business revenue. And this was an agreement I had with Gopal saying, if we get the core telecom working well, will we get the ability now to generate some new revenues, especially because revenue was compressed for the core telco. That's where we invented this concept of saying, can we build an adjacent business to the telco? So what did we end up doing? Communications platforms as a service, CPaaS. There's a company in the US called Twilio, which offers basically numbers and minutes through APIs, right?
Yeah.
We recreated the business inside Airtel, and it's called Airtel IQ. And that business is now serving hundreds of enterprises in India today.
Oh.
So that's one new business, very intelligent because it's built just on the adjacency of the telco. It's just a digital business. The second business we built up at Airtel was the IoT business. So the IoT business was digital revenue streams. Here again, if you want to put a SIM in a machine, how do you order the SIM? How do you manage the SIM, right? How do you do all sorts of like operations? We built the software for that and launched the IoT division, which again built new revenue into Airtel. The third business that was fascinating is we did a financial services business. So imagine all the data on consumers, right? Now, in India, I believe the number was about 4 to 6% of the nation is creditworthy. The remaining don't have access to credit. So they go take the gold in their house or something else and give it to their neighboring lender, and at an insane rate, they take money. So the question we asked is, can we use the telco data and add that to external data that's available? And can we figure out a credit score for the country and increase the number of people who can get access to loans? That's what we did with Airtel Financial Services. And that was a whole new business, which when I left was probably doing about $12 million of loan lending a month, right? Which is pretty cool. So those are some of the new businesses that we invented, which actually led to net new revenue for the company. So I'll pause there. That gives you a sense of what we were going after.
Yeah, that's incredible. How much are these companies collectively contributing to the revenue currently?
So when I left, the new business was attributed about $300 million of new revenue amongst all the businesses together, right? And I think the progression is continuing. They're continuing to scale it since I've left.
I'm curious to know, we can take any one of these businesses, the story behind it.
Yeah.
How did you come up with this particular business model or the idea?
Fantastic.
How do you think that, okay, I'll shift Airtel from a telecom company to providing finances or lending or in this industry?
So I think it all begins with first the will of the company, right? So is the, I would say, the senior most management aligned with that idea? Because I don't think these things are done in one division alone. I don't think it works. So if you think about like, oh, there's a technology division, they launched a new business and they try to grow it. I think that's where failure rates are high, right? The right way to do it is it integral to the company? With everything the company does, can a new business be launched leveraging all the powers that Airtel has today? Then the question we used to ask is, strategically, can you build a business with what would typically be, let's say, $100 million investment to build a business? Can you build a business with 1/10 of that cost if we leverage all these capabilities of Airtel? And when this comes together, can we write a pitch, take it to the board, and secure investments and run like a young startup? So the VC, the venture capitalist here, is Airtel itself.
Yeah.
We find a captain who runs that little startup. Every quarter there's a review. If you prove your metrics, you get more funding, you can scale. This is how we built every business. So let's take the example of financial services maybe. Or even better, maybe let's take the example of CPaaS, which is the communication platform as a service, right? The core theory was Airtel already has one of the strongest networks in the country. That's given to us, right? Can I build a digital layer on top where access to the network is now through APIs? This is the question we asked. Now, of course, we could because we have a digital team sitting inside Airtel, so they can do it. If you build something like that, who will sell it? Well, we have one of the largest B2B sales force in the country. They already sell all sorts of products into the biggest enterprises in India today. So we already have the network. We already have the ability to sell to the greatest businesses. We don't have to build this again. Imagine if you're a young startup, building these two things would have been enormous amount of time and energy.
Yeah.
We had it. What did we have to do?
One question
Build the digital
here.
layer.
Why did you even think about building that digital layer?
Because it has potential new revenue impact. So think about it as there's two existing capabilities that's already there. Airtel is making so-and-so money. Without much cost, can you basically build, in the parlance of like a startup, 100 crore business with minimal investment? Now, if you can build a 100 crore business with minimal investment, you grow that 100 crore business now to a 1,000 crore business, into a 3,000 crore business, suddenly it becomes a big part of the Airtel's net revenue stream. Unlocking new revenues in those days was a critical thing to do because the telecom, the core telecom, was getting revenue compression.
There's this one concept that you taught us in class, which is apply constraint. So, which is that whether you're thinking about a new innovation, new change, feature, etc., you apply few constraints and then think about what you can innovate, whether it is on cost, whether it is on number of people, investment, etc. And I can clearly see how Airtel did it, all of these stories. No
I completely
investment,
agree with
no
that.
cost,
So,
and
one of the most beautiful things about vision and strategy is one technique to unlock vision and strategy is applying a constraint. And Airtel, because of the nature of that few years, money was always a constraint. So almost all teams were told, invent without capital. So those were the best years of Airtel, in my opinion. It was
Yeah.
incredible. Yeah.
perfect. I think let's switch some gears now.
Sure.
After Airtel, you went on starting up an AI-based quant hedge fund in the US called Optica.
Yes.
Before we go deep there, like why did you start it? What is it about? I want to first take your knowledge and help audience understand what a hedge fund is, what do they do, etc. So let's start with the basics.
Sure.
What is a hedge fund and what do they do?
Perfect. So I'm also a student in this area. It's new. As you've seen my career, every 4-5 years I shift the industry because it gives me a lot of energy to learn about a new industry. So I'm a student, right? So if something is off here, always open to corrections. The way I've understood a hedge fund industry is there is private equity, right? There is companies that basically deal with private investments. And then there are companies that are in the public investment space, right? Like the stock market typically are public companies.
Yeah.
But whenever you are talking about private capital working for you and building companies, you typically think of three entities. One is the venture capitalists. Then you have the private equity firms, right? Like the KKRs of the world. And then you have hedge funds. The way you think about the three, both for the venture capital companies and for the private equity companies, you are deploying capital a bit long term. Let's take the example of a venture capitalist, right? Once you put money into a venture capital firm, they deploy it into a young startup, and then they groom the startup for the next, I would say, anywhere between 5 to 10 years. Then they get the money back, right? So here the concept is a lot of deep thought, then you make a decision and then wait for a long time to make the money back. So that's where typically venture capital is. Private equity is similar, but maybe slightly shorter time frames. Maybe it's 3 to 5 years, right, on the return of capital. Hedge funds also deals with private capital, except they think about more shorter time frames for the returns. So what they typically do is hedge funds will go figure out an investment strategy where they can put money in and within the quarter, within the year, make money back. So they're much more aggressive in their decision making. They're much more active in their decision making. And at the end of the day, they are accountable to their investors in a much shorter time frame. So the hedge fund we are building, for example, we're taking capital from high net worth individuals. Eventually, hopefully, we'll take capital from institutions. We are deploying the capital in the US equity markets, and we have a thesis. Based on the thesis, we make money in the month. And that money, of course, is returned to our investors within the month if they choose to, or at the end of the year, right? So that's the way I think about the various structures in private investments, and that's where hedge fund falls, which is a machine or a group of people that can actually create returns on capital, relatively short intervals, and they will always have a unique strategy to go after how to make money, right? Last thing about the hedge funds, the word hedge. If you want to make money, let's say with a stock instrument, you can go buy the stock, right? The problem with the stock is, when it goes up, things are good. When it goes down, what do? There's no action you can take except sell the stock, right? So the only way to hedge your bet is you got to sell at the right time. And the theory is most retail investors will not know when to sell. So therefore, you buy stocks and typically hold them for a long amount of time with the hope that over a large period of time, you generally make money, okay?
Yeah.
Hedge funds, I told you, operate in shorter intervals. So they need to have a technique to hedge, which means if things go down, how do you hedge the losses? How do you prevent capital loss and money loss? And you need to have a strategy for that too. So it's not just figuring out how to make money. You also have to figure out how to take on the risk and not lose money.
And do these hedge funds invest both in public and private markets?
They can.
Both.
There are very few rules that define what a hedge fund can and cannot do. So there's a private placement document that you give to the investor that documents all the potential strategies that a hedge fund can do. So you could have one hedge fund investing in public US equities or Indian equities. The same hedge fund can go and invest in crypto. The same hedge fund can choose to go buy a pizza chain and operate it and try to make money from the pizza chain. It's all within the realm of a hedge fund. You just have to be open about letting your investor know that all these methodologies could be applied to your hedge fund, right? Optica is a pure play US equities investment construct. We don't do all these other things. We invest in US equities and make money from there.
Got it. And how is it different from a quant-based hedge fund? What is a quant-based hedge fund?
Fantastic. So hedge funds, if you were to kind of look at examples, you could have a hedge fund where it's a really smart chief investment officer and his or her team that's got really smart financial strategies, and they're investing in stocks or currencies or whatever asset that they love, and they're making money from there, right? It's perfectly fine. That's a hedge fund. Now, what's happened in the last 2-3 decades is people who've got a background in engineering and data science, they are beginning to recognize that all the jobs the humans are doing, can technology and AI be used to go do them better, faster, more efficiently? To the extent where a lot of the trading now is technology-led, less human-led, okay? That does not mean the human is out of the loop. The human could be the one who's designing the algorithm and all that stuff, but at the end of the day, at the trading point, it's the technology that's trading. So when you have a hedge fund that is more geared towards this sort of a trading style, you tend to call it a quant hedge fund.
And what is the data that these quant funds train on? Because in public investments, I can understand you have a lot of market data available, but in private investments, what data do you train on?
So it depends again, right? So let's talk about if it's a quant fund in the equity market. You're buying and selling stocks, right? Now in that particular situation, there is some data that is pre-structured. So if you want data on that stock, the exchange will give it to you. You've got to pay a price and you can get it. It's very clean data, right? Now you can get this data, which is called level 1 price data. Then you can get level 2 price data. And as you go deeper, basically you're getting more and more of the information around price. Think about every single bid and every single ask in the market. Now, if you want to get that kind of data, it could be a lot of noise. So in level one, you don't get at that detail. You just get the price of that particular stock, right? You go to level two, you get all these bid asks requests at a very deep level in level two, and that also is good information if you know how to process it, right? So this is one gamut of data. So there you can get events data, price data, right? All that stuff is fine. Now there is a construct called alternate data, which is not the standard market data. Alternate data can come from anywhere. For the longest time, I believe, from what I've read, hedge funds used to go after, like, for example, credit card transaction data. Credit card transaction data, right? And that would come from the big credit processors.
Yeah.
They would just buy it in bulk, no PII, but roughly that, a particular product has been bought by a lot of people through their credit cards in that month. Now, you could use that data to go back and say, does that mean there's a trend where more and more of that product is being bought? So does that mean that the company making the product, stock is going to go up? Another very interesting example that's talked about is satellite data of cars parked in the parking lot of a big retail chain.
Oh.
So imagine now how many customers are coming into that retail chain, right? This is another way of predicting that, whoa, the customers are increasing, maybe more retail sales, right?
Yeah.
So these are all called alternate data, and there's a huge industry around it.
All of this is for public investment. I really like where you see how many cars parked in the retail setup. Never thought about that. In private investment, a quant hedge fund can invest?
Of course. So in a private investment, it will look more like a due diligence that one would do if you were to buy a company. And so typically you will need to have access. And because hedge funds, at least the big ones, have access to a lot of capital, they can get that access. So they can go talk to a mid-level startup, or they can go talk to a mid-level company, even a public company, and say, please give us access because we would like to buy you. Okay? So they could buy a startup and make it more from a VC investment strategy to a private equity investment strategy. They could shift it. Or they could actually go buy a public company and take it private. With the idea that if that company is under their management, the hedge fund's management, they can actually make a better job with the returns and such, make it more valuable, and then sell it back, right? That's typically a private equity play. A hedge fund can also choose to do it. Here's another way the hedge fund can participate. The hedge fund can take a part equity stake, not majority, a part equity stake in a private company. So let's say there's a very interesting startup. Let's take OpenAI, for example. A hedge fund could actually get access to their shares, private shares, and buy it and hold on to it. With the idea that when that company IPOs, the hedge fund will get a large kind of gain, right? So that's another way a hedge fund can participate.
Perfect. Super clear, all of it. Next question I have is, how is a hedge fund structured? Like, what are the different key players? In a VC or in a private equity, you have LPs.
Yes.
Then you have a capital or a fund size, and then you deploy it in the companies, and they have a life cycle. How does that work in a hedge fund?
In many ways, it's very similar. And that's why they're all in the private investment space, right? So comparing and contrasting to a VC firm, the hedge fund also has LPs, limited partners, whose capital goes into the fund.
Okay.
Now, very similar to the VCs, the hedge fund also has general partners, who are the ones who is managing the fund, right? So in that way, it's similar. The difference comes in saying there's a fee structure where VCs also have a fee structure, hedge funds also have a fee structure, very similar. So for example, in Optica's case, we have a 220 fee structure. And how that works is on the full AUM of the fund, there's a 2% that's charged basically for the year. And that becomes a capital that is then used to pay the salaries of the people working in the fund and whatnot, right? Then there's a 20%, which is a carry. On the profits made, you can take 20%, right? Now, the hedge funds would do this every year because, like I said, it's a short business, right? The VC's carry might come when there's a liquidity event, when they go IPO or when somebody bought the startup, right? But beyond that time frame construct, generally the structures are very similar, right? Now, when you think about how does a hedge fund run? Well, the most simplistic model, you could have a hedge fund with just one human being who's a chief investment officer. He or she has phenomenal strategies. Based on the strategy, they would take a prime broker. A prime broker could be Interactive Brokers or a Goldman Sachs, right? Through them, they'll trade. They'll make money, and whatever money is made on behalf of the clients, money can be returned back to the customer, right? So that's a one-person hedge fund. It can work. Now, of course, because of the complexity, because of the size of money, Typically, hedge funds can be a 3% team or a 20% team. And in the case of the big guys, it could be a 6,000-person team, right? But most of them will work with a unit that is doing the strategy. There's a unit that will provide the data. There'll be a unit that will kind of think about the risk of the company, right? That's the typical setup. When we come towards quant, a few more layers get added, right? There is probably a algorithmic strategy development team. There's probably an infrastructure team because now you have all these cloud technologies on which you got to run these models and whatnot, right? So it's an infrastructure team. So all these new layers get added if you have a quant fund because they've got all this technology needs, right? One more interesting thing within the largest hedge funds, there is a group called the high frequency funds. They're very interesting because the way they work is they put more, I would say, emphasis on the speed. So you might have heard these stories about some funds co-locating their servers next to the exchanges and all that. It's typically the high frequency funds who do that. And the reason why they do that is their entire money-making ability is actually put on their ability to move fast. So I call it the sub 4 millisecond level trading, which to achieve, they need their servers doing the trading sitting right next to NASDAQ because then the speed is achieved there and they make cents on the dollar for every trade. But they'll do like millions of trade in a month, right? So there's also that unit, the high frequency trading companies, that could be a company in itself or it could be a part of a larger hedge fund. So there's also that, right? That's the general structure of how companies are built. Some more oriented towards technology and others where there's no technology and there's basically humans trading. Both are within the same framework.
Okay, let's talk about Optica and take that example and understand how is it different from traditional hedge funds. So now you're running a company called Optica, which is an AI-based quant hedge fund.
Correct.
How is that different from traditional hedge funds?
Excellent. So let's take two comparisons. One is the traditional hedge fund, and then let's also compare it a bit to the new quant hedge funds. Right? Because we do believe we are trying to do something different, especially because the backgrounds of the people who build the company. We are not traders by profession, right? So if I were to just structure this a little bit, and maybe I'm making it too simplistic, but at least it'll be helpful to understand at the first level, right? Think about hedge funds on a spectrum of speed and intelligence. Okay? Let's say that those are the two levers. I'll add a few more interesting ideas on top of that, but first think about speed and intelligence, all right? On one side, let's assume that Warren Buffett was a hedge fund. I mean, he runs a company that invests today, but let's assume it's called a hedge fund, right? I would index Warren Buffett very high on intelligence and super low on speed. Because once that company makes a decision, they hold on to the decision for years. And the decision also made with a lot of thought. It's not like an instantaneous decision. Tremendous amount of research, analysis, and then they make a bet. So low on speed, high on intelligence. Then let's take on the other side, the high frequency funds. They really need it to be millisecond fast. 4 milliseconds and lower. But their intelligence is not as important because they run what is called dark pools, where within the dark pool, Arushi, if you are selling a stock and if I am buying a stock, this company is aware of these two transactions. And they, in like milliseconds, enter the transaction, facilitate it, and as they facilitate it, they make a little bit of money in the middle. Okay? So it's not really like intelligence that's helping them there, it's the speed. Now, typically, my understanding is most algorithmic funds need speed, but doesn't have to be as fast as the high-frequency funds, right? Maybe a day is okay. Maybe an hour is okay. Why? Because within the algorithmic fund, after all the algorithms are run, companies like WorldCount will have like a portfolio manager, a human, who sits at the top and decides to deploy the algorithm to market.
Okay. So the end decision making still stays with the fund
human
manager
being involved, right? And it's important because imagine in a company like WorldCount, there could be a lot of young engineers designing enormous amount of little baby algorithms. Somebody has to then come and look at all these algorithms and say, which mix do I send to the market? So it's still a human being, and then they push it to market, right? So is speed important? Yeah, but we're still thinking days and hours. No problem, right? A lot of intelligence on the models and stuff. Where Optica comes in is very interesting where we actually care about speed. So we want our systems to be fast. Maybe not as fast as the high frequency funds, but let's say hundreds of milliseconds. Hundreds of milliseconds fast, which is still way faster than a human operates. Okay? Why is that important? Inside Optica, our chief investment officer is AI. Now, AI's power, the way we've done it, is its ability to sense the market direction and then quickly take an action. And the underlying keyword being quickly. So we have to give the AI the ability to make millisecond level decisions to buy and sell, which is why speed becomes important for us, right? We are equally invested in intelligence, like the algorithmic funds are, and we have some sophisticated proprietary models that we have built that actually takes care of when to buy and when to sell. The intelligence of when to buy and when to sell a stock is sitting in that proprietary algorithms. That intelligence is also very important for us. That's the way I would categorize a general view of hedge funds. And on one side is the high frequency. On the other side, there is these human beings who are deeply thinking and making calculated decisions, very slow on time. And in the middle, you've got these algorithmic funds, right? That combines a bit of both. So let me pause there for a second.
Super interesting. You have completely replaced the role of fund managers by also achieving speed and intelligence. No compromises on any of these verticals. And thank you for explaining it this way. This is super clear. So the AI can either work on predicting what's the next wave for the given stock, or from the entire market, public market, what are the more stocks, other stocks that you can invest in.
Correct.
Got it. And
exactly.
Optica right now is on the predicting the
Correct.
how the stock is
we
going to be.
have very
next.
select stocks that we take, and on that we've run this prediction engine, which allows us to understand when to be in market, when to be out of market.
Got it.
That's kind of the area where we're working on right now, and there is some decent bit of success that we are seeing.
Got it. Many of the listeners are from engineering and business background, and most of them know how lucrative this job is.
Yes.
Working for a hedge fund, how much it's a good pay. But many of them don't know what exactly would you do when you enter a hedge fund.
Correct.
How does an engineer or a person from business background play a good role in hedge funds? What do you look for when you're hiring a candidate as well?
Perfect. So there's one which is Optica, then there is probably how the industry sees it, right? So let me try to reflect on both.
Yeah.
So typically if you're a graduate and you come from the engineering background and pure engineering background, the chances are that the infrastructure team I talked about is probably where you go in. And it's a very important job, because imagine if you're going for a high frequency fund. The job of an engineer there is to keep optimizing the time it takes to trade. So all the systems, the machine, the cloud, the co-located servers, you have to have a very good understanding of all of that to keep optimizing the time to trade. The second kind of job, which is again from the engineering background, is, but what if you're a data scientist and not an engineer? Then you go more towards the modeling side of the company, right? Where if it is a quant fund, which is probably where the engineers get excited because they're typically quant funds, then you become a modeler. You decide on strategies. You decide on how to develop various cool new strategies that can go to market and make money, right? So this is a very different job in the company, but you come in from the idea of math kind of backgrounds and ability to write like code in Python and build models, ability to train models, ability to then kind of vet them and launch them. All that becomes your domain. That's another kind of job in the same company, right?
You don't need any finance knowledge or background there?
In my opinion, those things can be learned. But if your background in strong statistical modeling, it's there, everything else can be learned, right?
Got it.
Now, of course, what I see students do more often these days is they'll do the statistical modeling stuff. They'll also take a little financial engineering degree. So then you know about the stock
CFA.
market. Exactly, right? Is it useful? Of course, because you don't have to go into a company saying, hey, what is a stock? You already know the stock markets, how they work, all that stuff, right? And some basics about how do you basically think about a stock's momentum and stuff. It's all kind of already known to you. So I think it's a cool thing to do if you know for sure if you're going into a hedge fund. But I'll tell you this. When we think about hiring people into Optica, we don't require that financial engineering degree. We just need phenomenal quant modelers, great statisticians. They could be working for a chemical plant. I don't care. As long as they've got the chops on the math side of things, they can come and help us, right? So that's the way I think about it. But of course, there may be certain companies that will say if you have a financial engineering degree, it's better, right? So these are two roles probably for the I would say the engineer or a data scientist to go into a quant fund.
And how can someone from a finance background come in and
Perfect. So
join
this is
the hedge
where
fund?
my experience is limited. But from my conversations with the industry, if you are more of the business finance background, in a traditional hedge fund, you will be the person who will eventually become like an investment manager or a portfolio manager, where you will run teams of analysts. Maybe you're the analyst in the beginning, Later, you get promoted to like a pod owner or something. But if you're a business and finance background, you could be one of the people who are inventing the strategies in a non-quant hedge fund. Because a quant hedge fund, you've got all these data scientists developing it for you with some supervision. In a non-quant, it has to be the human who's working on all these ideas with tremendous amounts of data, right? So those companies, let's say there's an engineer who's building tooling for you with the data, you are the final captain of using the data and figuring out what bets to make.
All of this was super clear. I want to switch gears again now.
Let's do it.
Adarsh, you have went on from being a software engineer to a product manager to a consultant
Yes.
to a CEO to a startup founder, not just in profiles, but also across industries from
That's right.
OS technologies to telecom to trucking business, now to a hedge fund.
Yes.
You've done a lot of career switches here.
Yes.
And many of the listeners, or even me, we've always given this idea that there's one passion that you need to follow. But in my life, at least, careers have always been evolving.
Yeah.
The paths that I can take, they have always been increasing and evolving in nature.
Correct.
How do you think about career switch? How do you evaluate that this is the career switch I want to make or this is the path I want to go into?
Correct.
And later I can ask like, how do you do it? But how do you evaluate which path do you want to go into?
It's a very interesting question, and I've thought a lot about it. And I've also thought about why I made the decisions I made. Right? And there's a lot of flavors to it.
Yeah.
See, I think it all depends on the person. Okay, so I've always been curious. I've always been a learner, right? Never satisfied without getting like deep answers to questions. That's who I've been. So in the young age, I'll be very honest, like, mom and dad said, be an engineer. It's a good job. So I think that was the driver. That's how I started in the engineering side of things. And even there, I started in multimedia because my passion was music and dance. Right? So then I was like, MP3 players, video codecs. Fine, at least there's something connected to music and dance. Let's go there, right? So imagine even in those young days, I had a passion, didn't follow it, ended up going in a path where everybody thought was more lucrative. And it turned out to be a good decision, right? Because I still dance as a passion.
Yeah.
My job, though, is not dancing. It's something else, right? So that's how I started. But over time, I started asking the question, which is, where do I bring my best self to work, right? That became the reason where I started making choices. And one very important guiding factor for me was always like, am I going to learn something new, right? It doesn't have to be in the new industry, but even in the current job, am I getting to learn something new? Two, am I getting very good at what I do? These two things were very important for me, right? So let's take my first job at Microsoft. I loved my job. I was working inside Xbox. I was working in their new music player called Zune. I was in Windows Media. Kept learning, right? And I was getting really good at it. I had a very early promotion. I was, I think, 24 when I became a manager of a software team. It was pretty fascinating. I had people reporting to me who was like 10 years older to me in those times.
Yeah.
But that is a meritocracy kind of a situation. So that was great. But then, what was going on in my mind is I'm writing software, but somebody's telling me what to write.
Yeah.
And I was like, no harm. I'm enjoying this. But who are these people who are telling me what to write, right? And then somebody's deciding how to take it to market and sell it. And I had a lot of opinions. I was like, but why are you doing it this way? Can't you do it the other way? I was like, no, you're a software engineer. So I was like, okay, what do I need to be? So then you take my opinion, right? Because I want to tell you how to think about the go-to-market, right? Slowly realized that, wow, there is a product management function. There's a marketing function. There's a strategy function, right? Fascinated. So even within my software engineering job, I was always a guy who had the hand up to say, hey, do you need help in product management? Let me jump in and help you. Okay? One thing led to the other. I did my MBA because I really wanted to get a sense of all these different disciplines. So during my MBA, my classmates were I went to Wharton, right? So I had friends from like McKinsey, who was my roommate, right? A really good friend. I had friends from investment banking. I had friends from product management. I had friends from nonprofit. What a wonderful place to get to see all these roles in action.
Yeah.
It was a very formative experience for me because you learn about all the possibilities and now you're like, damn, I want to learn them all. You can't. So you make a choice and say, wherever I go next, I'm going to learn one skill well.
I can see that technology has been the fundamental layer in most of the decisions that you take. And being a person like you, when you go with an open mindset to an MBA institute or to exploring paths, there are 2-3 paths that excites you. Maybe I can go into VC. Maybe I could go become a consultant. Maybe I could go become a PM. How do you select one of them
Very good.
and not get into the feeling of FOMO?
And I would almost say like a no regret framework, right? So if
Yeah.
you look at Jeff Bezos, he talks about this no regret framework. I think it's a really good framework, right? Where let's say you have three choices in front of you. The question you should ask yourself is if you land up with one of the choices, let's say there are three choices and any one choice was given to you and you can't pick, it's given to you, would you be unhappy on that choice? Because if the answer is yes, then that's not a choice. You should remove it from your matrix, right? So that's one very important thing for me. Whenever I look at options and choices, I am always okay with the worst option happening to me. And it's a little bit of philosophy here. I like being happy. I'm a very positive human being. So I create these no regret frameworks because I say there are 10 things that can happen. Are you okay with that 10th thing happening to you? Maybe that's the worst one, right? Are you going to be happy if that happens to you? If the answer is no, I work very hard to eliminate 10. I work with 1 to 9. And eliminating 10 may require some work. It may require me upgrading my skill or some other aspect that I have to fix. But if the answer is no, then I have to eliminate. Because if I end up with that, I know I'll be unhappy, right?
Yeah.
So now the questions I'm left with 9, all 9 are okay. But of course, I don't know if 1 is better or 2 is better, 3 is better.
Yeah.
Right? The reason I'm okay with any one of the 9 is I'm a believer that today is just one day. Wherever I start, I will progress and I'm going to make more things happen in the future. But of course, like any other human being, I will try to now rationalize it, put some vectors on it. Maybe it's salary, maybe it is learning, maybe it's something else, access to some really great personalities who I can learn from. And then you start indexing and saying, maybe, out of all of this, I'm going to pick number 3. And this time I'm indexing on learning. Next time, I may index a bit on salary. Learning will be there, but there's one job who pays you a bit more. I might be okay with that, saying, hey, 3 times I've indexed on learning. Maybe this 4th time, I'll index a little bit on salary. That's okay, right? But these decision frameworks, once I take it, it's a no-regret framework. I will never go back and say, oops, I should have done the other thing. That's done. That's in the past. Now look forward.
From the 9 things that were equal to you, I think after that, it's a mindset change.
Mindset change.
That you focus on one thing, see where that goes.
Correct.
If that doesn't happen, you have built a life that you can come back and choose another path.
And that's so well put. That is how we should think, because otherwise, you said right, the FOMO comes in, regrets come in, and then you're not your best self when you're performing. So when you pick something, be dedicated to it. 2 years later, it may look as if the 4th option was really better.
Yeah.
Doesn't matter. You're on the 3rd option. Go do it the best way you can. After you finish the job well, think about what you want to do next. And that might be the 4th option again, right? That's the way I would expect to run my life.
So, Adarsh, this is the last segment of the podcast, which is sort of a rapid fire,
All right.
but you can take your time to answer those. What is the next goal in your life right now? What's the next big goal in your life right now?
So there's 2 parts to it, right? So I think I'm at a point in my career where can we build a company that's truly unique, where the culture is incredible, where people thrive, have great fun. And I've never been able to do that because I've always been a part of a company, a division owner or CEO of Airtel Digital, but Airtel was still a different entity, right? That's kind of my goal now. Can you build a great place to work that's also considered to be incredible in terms of return to shareholders? That's one of the projects I'm on with Optica, right? The second part of it, which is equally important, is I'm leaning more towards contributing back to society. So a question in my head is, can Optica be that company that's creating enough wealth which can be then redirected to solve some of the greatest problems?
One follow-up question on this. When you said that you want to make Optica the best place to work, one of the best places to work, have you ever thought about how would you quantify it? What's the metric that you look at?
So, even in this course that we're doing at ISB, we talked a lot about great managers, right? And people who take care of people, right?
Yeah.
So the quantification for me is typically every employee, are they blossoming in terms of their growth? Are they with you for a long amount of time? Is the vision big enough that you can accommodate growth of these individuals for a while, right? And this might again go a little bit into philosophy. What's their happiness index? And some of that is reflected in the conversations. Some of that is reflected in the career progression documents. But as a holistic human being, are you happy because of Optica, right? Are we leaning in more towards your personal side and encouraging you to be having a happy life there too?
Yeah.
All these are the questions that I think I will probably probe to answer what you asked me. But that's the way to do it. Yeah.
A mix of qualitative understanding to define a quantitative score.
Correct.
If you were to graduate today from Wharton,
Yeah.
which industry would you pick to work with or to build in?
So if I were to graduate from Wharton today, which means there's a lot of possibilities ahead of me, I would actually go into what would AI actually do to the food industry or to the climate industry. Those are two things I would probe. Now, going back to the regret framework, right? Put all that on the table, look at what's relevant for me now, and if that fits the bill, I would ideally pick one of these because both these are, in my mind, like big societal problems.
Perfect. Adarsh, you are a software engineer who who eventually become an MBA grad. A lot of software engineers evaluate that, should I go into the business world? Should I not do an MBA? What should be my next step is?
Yeah.
What would you, suggest them, or a framework that they should think about to evaluate this decision?
So listen, for me, the easiest framework is a Swiss Army knife, okay? First ask the question, what do you want to do in life? Very important question, right? If that is truly what you want to do in life, now the question is, what does it take to get there? So let's say you want to be a vice president of software development, okay? You're one of the best software engineers today. If you keep at your job, you will probably technically be ready for a vice president sometime in the future. Maybe you have to pick up a few leadership skills on the way. There are a lot of mentors around you. Go reach out to these great mentors, pick up those leadership skills. That's enough. You can probably be a vice president of engineering in your career, right? If there's a blocker, if somebody says, no, you got to know A, B, C, D, figure out how to learn A, B, C, D. Fastest, easiest path. Why? You're already on the job. You're already on track. Yeah. Now, if they come and tell me, should I do an MBA? My only question to them is, why do you want to do an MBA? Do you love business? Do you want to learn a lot about? No, I hate business. I don't like business at all. So I'm saying, please don't do the MBA. Go get mentored by a lot of great leaders, learn leadership. You're already doing the other stuff. In fact, go spend more time on a technical course. Somebody else comes to me and says, I'm a software engineer, I'm good at it, but ultimately I want to build a company of my own. Okay? So now the question is, okay, you can still be a software engineer all the way and hire some great partners who will run the business, legal, all that stuff, right? Do you have a passion to know about those things and run it yourself? If the answer is yes, I would say MBA is absolutely an option. Go structurally learn those things. And if you want to accelerate that learning, go for a good course, 1 year, 2 year, get it, come back to the industry, do the new jobs. Alternatively, you are willing to get a partner who's a CEO. I am the CTO, in which case, again, the question is why an MBA? You're finding the right partner to build your startup. They'll take care of those elements which you are not passionate about.
Many engineers don't know what they want to do 5 years down the line, 10 years down the line.
Correct.
Would you recommend someone to do an MBA just to experience and see if that is for you? Or would you say no?
So here's
a
a question. Wonderful question, by the way, because that is where you're saying, I don't know yet. So in my assumption, I'm almost saying you kind of know, therefore you can make these decisions. You don't know yet. So now comes a very interesting framework. I'm real-timing this with you, but let's see how that goes. Well, what would you do with your time for the next 2 years, if not an MBA? You must have an answer for that, right?
Yeah.
I'll continue on my same job.
Same job.
Okay. What do you plan to gain from continuing on the same job? Well, some monetary benefit. Are you going to learn anything more? Let's say the person says, I don't know, because I've been on this job for a few years now, but there's a monetary benefit. Okay, how important is money for you? Not that important. Well, go for your MBA. Because anyway, you're saying the next 2 years, you don't have a plan. Okay? If you get admitted to a great MBA, it's a no-regret setup. You'll learn a ton. You can never look back at it and say, oh, it was worse than the 2 years I would have spent in this company. That, I would almost assure you, will not be the case, right? So then go for your MBA. But what if, in those 2 years, you have a really good plan? Maybe you are joining OpenAI as one of their senior researchers and going to do something incredible. Well, now there's an opportunity cost. So now you've got to ask yourself, is it MBA or is it this new role where I'm getting to learn something super cool and new? There, you have to put that regret framework. That's choice A, choice B. Now think hard. What matters to you? What does MBA bring in? Are you passionate about business? Not much. It's almost like a hobby. Are you passionate about this OpenAI research thing? I'm really passionate. Don't do the MBA. Go for that role 2 years later. Why? After that, if you really care, you can go back and do the MBA again. There's the last one, which is budgets. There's always the opportunity cost of money, and be honest with yourself. Where are you in terms of money? And if money is available, use it. It's a good investment. If it's not available, be thoughtful. Maybe you do a part-time executive MBA while you're doing your job, right? These are the ways I would consider it, and bringing in money also, because that's part of reality, right?
You've very beautifully packaged this advice. And for someone who doesn't, this is my personal recommendation. If you don't know what is the why, how do you find the why, Stanford GSP's application has an essay question which says, what matters to you the most and why? Write that down, and the clarity which comes to your head after that, it's incredible. It's just even if you're not applying, you should answer that. So yeah, Adarsh, this brings us to the end of the episode. Thank you so very much for sitting here and spending the time on this particular show on the topics that we have covered. The way you deliver your thoughts is incredible, very precise, very clear, very succinct, and thank you so much for doing this.
Arushi, thank you for having me on this podcast. I thoroughly enjoyed it too.
Perfect. Thank you so much.
Thanks again.